Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, things haven't been bad enough in the markets with the fears over the coronavirus. It got a lot worse this weekend. Oil's been moving down, and I'm sure you can understand why. People not wanting to travel, lots of events getting canceled. So if people don't travel, the demand of oil goes down, so the price of oil comes down. And oil had a big downward day on Friday, which prompted an emergency meeting of the OPEC nations over the weekend. The expectation was the OPEC countries were going to get together and cut production so that would support the pricing. Well, they had their conferences, and Russia didn't want to cut production. And so in a big about face, the OPEC nations decided they're going to cut prices. So they slashed the prices, and when the futures opened, the price of oil tanked. We still have a lot of the economy tied to energy prices and specifically oil, and so that hurt the futures. The futures went down. In fact, we've been limited down on the futures for about an hour and a half. They just recently reopened. So unless something drastically changes between now and when the markets open tomorrow, it's going to be pretty ugly on the market. So let's take a look at the charts and give you an idea of where we could go. Well, they said in the intro, talked about how the economy is still very dependent on energy and oil, etc. And if the market moving down and business shutting down and economy slowing drastically because of this virus wasn't bad enough, now we have that on top of it, we're almost certainly going to move into a recession in the very near future. And I posted my recording of February 28th, a comment I'd made back in last September, once the yield curve inverted, that it's never different this time, even though everybody was saying, oh, the only reason the yield curve inverted was because some countries have negative rates, etc. And it's just never different this time. You just have to trust that. There's a lot of smart people in the equity markets, but there's even more smart people in the bond markets, and you have to really pay attention to what goes on in the bond market. With that said, we have this downward move in the market. In the outlook that I did for the year 2020, we talked about it was very early. The coronavirus was just kind of coming on the scene. Didn't know a whole lot about it. We'd heard about it. Certainly wasn't a big deal at that time, but we'd mentioned that it could become a black swan to the markets for this year. And boy, we have a whole bevy of swans now. And by the way, I'm not smart enough to know that a whole grouping of black swans is a bevy. I Googled it and looked it up. So it is. It's a bevy when you have a whole bunch of them. But we certainly have the coronavirus making a major effect, even though at this point in time, and again, I'm not insensitive to those people that are sick or ailing, or even those that may know someone that's passed away. But at this point in time, at least at this point in time, and viruses can mutate, things can happen, it's really a disease that's affecting the elderly. It's not affecting younger people that are healthy. If they get it, they get sick for a little while, a few days, and then they feel better. And that's coming from the healthcare professionals. Now, who knows what happens down the road, but the hysteria is there, right? The fear is there, and that's all that really matters, is the fact that it is shutting down business is basically what's happening. So looking at the chart of the market, and then we'll get to look at oil here. The easy trades were when we came down to here, we actually sent out alerts to our subscribers. We caught a downward move, not at the very bottom, but we had a nice 156% gain and a downward move. And then we were so far away from the 10-day moving average that we had calls sent out to our subscribers and caught the move back up to the 10-day moving average. Again, that was pretty easy. You've heard me say a million times, no security in any time frame gets very far away from the 10-day moving average. So then we come to the downside here, and we gap down on Friday. So we sent out a spread this time, not just straight calls, just in case we weren't done going to the downside, because when you buy calls and sell calls together, that's a spread, and you can buy back the short calls if you continue to go lower. But we wanted to be positioned to capture this bounce. And by the end of the trading day, the position was profitable because we'd moved back higher. Well, at this point in time, that's certainly not going to happen, but that's why you leg in with small positions, and that's why you put on spreads when you have a different scenario. So if we get that panic, and it just hasn't felt like up to this point in time that we've had that actual just all-out panic sell-off. Sure, we've had the VIX move higher. I wanted to show you a chart of the VIX, and we actually hit 55 early in the day on Friday. But if we look at a weekly chart and go back all the way to 2008 when we had the great financial crisis, as everybody calls it. You can see that we spiked all the way up above 90 to reach that panic selling before we found a bottom and started to move back to the upside. So it just doesn't feel, even with the VIX at 50 plus, that we've had that panic event yet. But at this point in time, we may very well, the futures are limit down again. So they opened up and they tried to trade, they bounced a little bit, now we're back limit down again. So we'll see how things trade into the morning, but I just can't see anything but an ugly open occurring at this point in time. So looking at interest rates, the 10-year note at this point in time with oil falling, etc., is down to 0.5%. So, I mean, are we going to zero? Boy, that could happen. We had a bit of a doji here, so we were kind of set up for that bounce. Again, remember, we had the gap down. We had rallied up near the highs on the close on Friday. We were pretty well set up for a move back to the upside. A doji in rates and a gap here. We go up and close the rates. Rates move back up. That would have been supportive of the markets. But then this oil thing with OPEC has changed everything this weekend, and we'll see how Monday plays out, how we look into the close on Monday. Here's price of oil. You can see here's the ETF for oil USO, and there's that move down that I was talking about on Friday, and then here's the futures. And the important thing to remember here on the price of oil, and we're going to be way below that. That's not where we are at this moment. That was on Friday, but the price is down in this area now. And with the fracking that we have in the U.S., where the U.S. has become a lot less dependent on Middle Eastern oil, the price that you want to watch is $35 a barrel, because oil needs to trade above $35 a barrel because the fracking is expensive. So it has to trade above $35 a barrel for those companies to make money. So has OPEC just decided they're going to play hardball now with Russia, who didn't want to agree to the production cut. They're going to blow out all the companies here in the U.S. and make us, again, more dependent on Middle Eastern oil. It's going to be interesting to see how this plays out. But the speculation, at least at this point in time, is that oil could go down to $20 a barrel. Will it get that far down? I don't know, but there's speculation now. Remember, when you get this kind of emotion involved in the market, you get extremes on both sides. So we'll see how that plays out. But back to our markets, if we were to open right now, we're going to open right here. That's about where we would open if things are as they are at this moment in time when I'm doing the recording. So that means that this support that the market has been trying to hold here is broken. We're going to break that level. So that brings us down to the previous 4, which is just straight out Elliott wave. Pure and simple. Wave 5 ends. You retrace it, you move down to the previous 4. You don't usually do that in 2 weeks, but that's where we are now. And then if we break that, that's where I said in the last recording, if we break that, Katie bar the door, because there is nothing to stop us from going back down to those December 24th of 2018 lows, which means 14, 15 months of gains will be wiped out in a very short period of time. So we open here and trade down to this previous 4. We need that level to hold, or it gets really, really ugly, even uglier than it's been already. So wish I had better news for you, but that's an update as to what's really going on and brief explanation as to why. Going to be another exciting, interesting week. We'll see how things play out. Take care out there, everybody. Look forward to talking to you again soon.